Are we on the edge of a financial cliff? Join us as top economists dissect the latest market predictions, from a potential 30% stock market drop to the future of inflation and job market trends. Betsy Stevenson, Peter Berezin, and Callie provide exclusive insights on what could drive the economy into recession. Subscribe now to stay ahead of the curve and protect your investments. Today on Financial News in Review, we will summarize the following videos. From David Lynn, we have Will Layoffs Soar? Economy in Treacherous Waters, former Dept of Labor chief economist. From David Lynn, we have Stock Market to drop 30%. Why Bullish Economist turns Bearish, Peter Berezin. From Public App, we have Why Politics Don't Matter for Your Portfolio, Callie. Welcome back to David Lynn's channel. Today, we're diving deep into some treacherous waters with Betsy Stevenson, a powerhouse of economic insight. She's a professor at the University of Michigan, former chief economist for the U.S. Department of Labor, and a go-to voice in mainstream media. Together, they tackle the swirling currents of inflation, the labor market, and the perplexing standard of living in the U.S. Thanks for joining us, Betsy. The central theme of this discussion is navigating the precarious state of the American economy. Betsy Stevenson highlights the Fed's impending rate decisions amidst persistent inflation, the dynamics of the labor market, and the impact of housing policies. She emphasizes the interconnectedness of these factors and their implications for Americans' standard of living. Here are the key points discussed by Betsy Stevenson. Inflation concerns. Inflation remains a top concern for Americans, and despite common belief, the president has limited control over it. It's mainly the Fed's territory. Stevenson notes that many people misunderstand inflation, thinking in terms of deflation, which could be harmful. Unemployment and inflation nexus. Despite traditional views, the U.S. brought inflation down from 9% to 3% without a significant rise in unemployment. Higher labor force participation, especially among women and returning immigrants, expanded supply, which helped curb inflation. Housing market strategies. Expanding housing supply is crucial to fight inflation caused by rising housing prices. Government should reduce regulatory barriers to increase housing density, and everyone should curb their NIMBY, not in my backyard instincts. Role of multiple jobs. Rising multiple job holding, especially among higher income individuals, signifies more opportunities rather than economic distress. Betsy Stevenson made the following predictions. Inflation trends. Stevenson predicts that inflation won't resurface to its 9% peak, but might stabilize around 3%. She questions if bringing inflation down to 2% is worth the economic pain, hinting that a 3% target might be more realistic in the future. Rate cuts. The Fed may need to cut rates sooner than desired to avoid a recession, even if inflation isn't fully tackled. Betsy Stevenson concludes that navigating these treacherous waters requires collective action. We must bolster housing supply, understand the evolving labor market, and be prepared for a cautious economic policy approach. Her call to action. Everyone, from policymakers to everyday voters, needs to engage in solutions to improve the economy. And remember, diversify your information sources, like subscribing to David Lynn's channel for more expert insights. Welcome to the David Lynn channel. In today's riveting episode, David Lynn sits down with Peter Berezin, the chief global strategist at BCA Research. Once a bullish economist, Peter now finds himself wielding a bearish outlook, predicting a potential 30% drop in the S&P 500. Prepare for a deep dive into this financial flip-flop. Peter Berezin presents a stark outlook on the stock market, foreseeing a potential drop to 3750 on the S&P 500. His adjusted forecast stems from the weakening consumer spending, the fading buffer of pandemic savings, and a significant tightening of lending standards by banks. He adopts the analogy of a warm glass of water slowly freezing over to illustrate the delayed but impending impact of prolonged tight monetary policy, nudging the economy closer to a recession. Here are the key points discussed by Peter Berezin. Stock market expectations. Peter projects the S&P 500 could drop to around 3750 based on two reasonable assumptions: a decline in the forward PE multiple to 16, and a 10% cut in earnings estimates. Comparing with historical data, this isn't overly pessimistic, as previous recessions saw more dramatic revisions. Economic cooling Berezin compares the current economic situation to a glass of water freezing over, suggesting that the economy's cooling period post-pandemic is nearly complete. Indicators such as the depletion of pandemic savings, normalized job openings, and rising mortgage rates contribute to this cooling effect. Consumer spending concerns. Consumer spending, which fuels 70% of the economy, is facing pressure from depleted savings, low savings rates, and heightened credit card delinquency rates. Peter highlights tighter bank lending standards and historically high credit card rates as additional constraints on consumer expenditure. Monetary policy and inflation. Despite possible rate cuts from the Fed, Peter argues that the effective rates paid by businesses and households will remain high, keeping monetary policy effectively tight. The risk of a resurgence in inflation poses a dilemma for aggressive rate cuts. Sector performance. Berezin forecasts defensive sectors such as utilities, consumer staples, and healthcare to outperform amid economic downturns. He views healthcare particularly favorably due to its relative affordability, pricing power, and the aging population boosting demand. Peter Berezin made the following predictions: S&P 500 drop. Berezin predicts a drop to 3750 for the S&P 500, dedicating it to reduced forward PE ratios and cut earnings estimates driven by slowed consumer spending. Recession. A recession is anticipated once the economy freezes over, marked by a drop in consumption, lower firm hiring, decreased capex, and increasing unemployment, which could rise from 4% to 6 to 7%. Global implications. Peter anticipates China facing a Japan-like deflationary crisis, with excess savings and insufficient stimulus, which may slow down demand for base metals and other global economic impacts. Berezin's revised bearish outlook hinges on upcoming economic strains, emphasizing the need for caution. He advises investing in long-term bonds and defensive sectors, while suggesting a pullback from vulnerable stock market positions. This analysis underlines the complexity of navigating the delayed impacts of monetary tightening, urging viewers to remain vigilant and adaptable. Welcome back to the Public App channel. Today we're diving deep into the intricate world of markets with Callie Cox, who recently took up a new role as Chief Market Strategist at Ritz-Holds Wealth Management. Get ready for some market wisdom and possibly a few surprises. Callie Cox asserts that while market concentration, especially in major tech stocks, has driven significant gains this year, the broader takeaway for investors is that politics should not dictate investment strategies. The focus should remain on market fundamentals and leveraging opportunities regardless of political noise. Here are the key points discussed by Callie Cox. Market concentration. 5 major companies, NVIDIA, Microsoft, Apple, Amazon, and Meta, account for nearly 60% of market gains this year, with NVIDIA alone contributing 31%. While market concentration is natural, the current levels are unusual and could pose risks if these key stocks falter. Impact of Federal Reserve policies. Cox explains how lower interest rates can stimulate investment by making debt cheaper and influencing risk behavior, potentially bringing more stocks into the market rally. Stock market volatility. June 2024 has been exceptionally calm, a rare occurrence in the backdrop of high interest rates and uncertain economic conditions. Investors should expect volatility to return, particularly as trading volume decreases over the summer. Elections' impact on markets. Historical data suggests that the occupant of the Oval Office rarely has a significant impact on the overall market. Sector-specific movements, like those influenced by policy changes, are more likely to be affected. Diversification strategies. Callie emphasizes the importance of balancing risk and suggests utilizing both savings accounts with high yields and stock market investments for long-term growth. Callie Cox made the following predictions: short-term market volatility. Cox predicts that we may see some sell-offs or down days over the summer, driven by low trading volumes and potential negative headlines. She stresses the need for a balanced approach, being prepared for these fluctuations while keeping an eye on long-term goals. Potential rate cuts by the Federal Reserve. While lower rates could boost more stocks into the bull market, Cox warns that much depends on the economic outlook and the Federal Reserve's future actions on interest rates. Callie Cox wraps up by reinforcing the idea that market fundamentals should guide investment decisions, not political events. A diversified approach, understanding both risks and opportunities, is vital. And remember, in the world of stocks, time in the market beats timing the market every time. In this video, Betsy Stevenson analyzes how interconnected elements like inflation, job market trends, and housing policies impact the American economy, advocating for enhanced housing supply and a better understanding of the labor market. Peter Berezin shifts from a bullish stance to predicting a 30% stock market drop due to shrinking consumer spending and tighter bank lending standards, advising investment in defensive sectors. Callie emphasizes that politics should not dictate your portfolio, urging a focus on market fundamentals and diversification for long-term success. Despite differing perspectives, all experts underscore the importance of cautious, informed investment strategies in uncertain times. Thanks for watching Financial News in Review for July 5th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.